Hi, it's Tim Quast, and thank you for joining me. I'm going to go through using MarketStructure Edge 2.0 for those of you who are brand new to 2.0, and thank you if you've been using 1.0. This is a both functionality demo and practical use of Edge data demo. So here's where you begin. When you log into the platform, you're going to arrive at the dashboard that shows you your portfolios, both the ones we create for you and the ones that you create. And it's a very simple navigational scheme here. You can see across the top, if you want to create a portfolio, that's easy. If you want to search for something, you could do it that way. You can do it right here. They're really interchangeable. It's just to make them very quick and easy to use. So you can use, if you want to search for Apple, very easy to do that. Then you have to click this and it'll immediately give you the data visuals. That's why data views, whatever you want to call them, supply demand. Then if you can profile that right straight from here. So if you want to back test the data, say, well, let's go find out when we should buy Apple. Very easy to do from there, and I'll show you additionally how to do that. Look how beautiful that is. So, if you buy Apple when it rises above 5 and sell it when it returns there, it's just a really consistently good thing. Looking down here, here's an interesting thing. The last couple of trades, though, even though we have a very nice return, it's only a 30% here. We looked at it here, 33% technically. One trade very good, two in which we, at least in net terms, didn't make money. So I would look at that a little more carefully. These things change about 90 days, as I talk about from an entry-exit standpoint. The market is in continual flux because of the mechanics that run it. Asset allocation schemes change. The money comes and goes. Money gets added to the market. From retirement accounts, required minimum distributions. Those things are going to change. And so you have to be aware that it's not a static environment, and it's great to look at about 90 days. It's a great way to think about the market. So let's go look at how you can get to profiling stocks. I'm going to put in a ticker up here. Let's put in Microsoft and click the search glass there, and it instantly shows up again. You can once again profile it from there. You could add it to a portfolio. You can enter a portfolio that already exists and add it to that. You can create a dynamic portfolio that's in easy step number 2. You can watch that video. But it's very easy to do things from just about any location. Going to the dashboard, what if you want to profile stocks in your portfolio? Then the key is here from the actions list. This will let you profile it, look at the data, export it to Excel if that's what you want to do. Use that little drop down arrow there, and you can immediately see data. Expand out the data views that way. Then if you want to profile it, you can do two things. You could click this and that'll immediately open it in Profiler. You could click the box and profile it. Lots of ways to get there very, very efficiently. And so that's the core navigation. Broad market sentiment there at the top. It's in your portfolios as well. You'll see if I go to the dashboard, you'll see it right across the top. You can click there. There it is. If you click through a portfolio, you're going to get a 30-day view of broad market sentiment. So you see everything all at once. Here's the portfolio, the demand side, market structure sentiment. The supply side, short volume. Boy, not great there, is it? And then the broad market view. And then the portfolio. Okay, so that's some functionality. Just play around with it, but I think you're going to find that the platform's very fast. It's a browser-based platform, so maybe I should show you that really quickly. So if you were using Microsoft Edge, for instance, and you wanted to find this, it is in the apps. So this little button over here, and this is where you would see all apps. Of course, Microsoft always puts its own stuff in the front, but there's somewhere in here it should show up. MarketStructure Edge will be an app that downloads through the browser. And then if you're using let's say Chrome, this would be true for, wherever the apps are in the browser that you're using, that's where you will find it. So once again, here in Chrome, you click here and there's Market Structure Edge. I'm actually running it right off of my taskbar there. But if you hit this, that instantly launches the app. So that I think is working really well. Had to log back in because it's a new instance of it. Now, let's go through just a very basic example of using the platform, just exactly as I would. I'm going to update that too. So here's how you do this, and exactly what I would do. So I go to the dashboard and I want to know, well, what's all the money doing? I'm going to scan the dashboard to see what the trend lines are in demand and supply in all of the portfolios I've got. I can just look across here. And I'm going to look for things where there is rising demand and falling supply. And really, you come to energy. And energy has been a very good performer in Q3 and the first part of Q4 2021. So I'll click here, and you notice it said 139 companies comprise this sector. And it's going to rank them from 1 to 10 in effect, because the whole principle here is that you want to buy rising demand. So it's naturally going to give you the lowest ranking and the lowest short volume, and then move up the scale. And because something's a 1 doesn't guarantee that it's going to rise. Some things spend a lot of time at 1, and if they don't move off a 1, it's going to be hard to get returns. So I might look at this and say, well, I probably want to find things that are 5s and rising, which you can go search for. We'll look at that too. But here, for instance, I look at NGS, 5.2, trend is up, short volume is 41%. The trend in short volume is up too, but it's not too bad. It's a very small stock. I think that's important to know. Difficult to trade something this small. But nonetheless, let's just use that as an example. And so we're going to look at the data visuals here and say, well, that's not bad, right? You have a nicely rising demand side, and sure enough, that has given us that it's been a good telling indicator that the price is rising. I will point out, notice that this stock trades for between $10 and $15. It's more difficult with Edge for stocks that are nearer to $10 or below it. Why? Well, because they tend to be a lot more volatile. And the more volatile a data set, the harder it is to be precise with the outcomes. And so I always put that qualifier in, that stocks that are low priced can be challenging from this standpoint. But we're going to use this as an example. So I would first thing I'm going to do is expand that out. And it's not great, but it has had steadily higher highs. So the demand has steadily risen, and maybe that's a good thing. I prefer stocks that are hitting 10 and then decline and give us an opportunity to buy it, because it doesn't matter what you pay as long as you sell it for more. Right? It doesn't matter what it was priced before if you didn't own it. Don't worry about that. Worry about having the best opportunity to produce a return. And so, here's a potential opportunity. And so then let's go profile it. And we can just click that ticker, and we'll go over here and look at it. It'll immediately tell us, well, what's it like if you buy it at 5 and sell it when it returns there? Not great. You buy and hold it, it's 18%. That's what buy and hold means. Over that same 90-day period, the SPY is up 3%. So buying and holding, this stock has done much better than that. But we want to trade things. So can we look at the data and see why it hasn't done great? From a trading standpoint? Number one, it's a low price stock, but look how much time it spent below 5. I mean, that's 58 days out of 90. And so we know that probably we don't want to hold it all the way back to 5. We may sell it when it's a 10, if it's a 10, and if it isn't, that'll be a problem. So that's not great. Let's look at the uptick and sell at 10. We just want to look, and there's the return. So we could produce roughly the same amount in let's call it 75% of the time, 72 days instead of 90. Gives us another 18 days to go find something else to produce a return with. And I'm rarely hold things that long, but I'm illustrating how to look at the data. Then I like to look at the trading periods. So one of these is very long, and clearly we're not going to stay for 56 days and lose 10%. I'm not going to do that. But you could say 2 of the 3 trading periods produced returns. So not only did the data tell us that if we follow this math, if we bought an uptick in that stock, wherever it is, and we sold it when it was a 10, that we have a 67% chance of producing a return. We're increasing the probability of a good outcome. And by the way, if we looked at the data here where the total return was a minus 10%, there were probably plenty of opportunities in here to make money. So, it's up 0.5%, then it's down 5. Then it's down another 1.5, then it's down another little bit more. But then you have this period where it does better and you probably leave, right? So you're not gonna stay for 56 days. But this is the point. This is not a great example because I prefer liquid stocks. I just wanna I wanted to show how it doesn't matter what it is, the principles apply. That you want to go through this process of finding things where there's rising demand and stable or falling supply, below trend, that's good. I also say when stocks are 50% short, there's clearly greater risk that your gains are going to be muted or that the stock could go down. Any drop in demand and that stock's going to go down. But even here, we could create the best probabilities of producing returns. Then you have to follow that. So, if the stock's not ticking up, these data won't work. You have to say, well, now I want to make sure that I know when this uptick occurs, and then I'm going to sell it when it's a 10, or take the gains before then. So that's pretty good, right? So then we could create an alert to tell us about this. So we click alert, and now it will tell us exactly these data, and it will inform us when those conditions exist, and we don't even have to worry about it. That's an example of going through the process. What if you want to, do it more simply? Well, that you can do. You could create your own watch list. I have one in here, in fact 2, TQ positions that I like. I don't trade a whole bunch of stuff. I like to find things where I can produce consistent returns and trade those. And so let's just use one of those as an example. So I'm going to go up here to the search box and hit MSFT, Microsoft, and it's a great stock to trade. I mean, there's no question the FANGs are challenging, and so this will be a great case in point of making sure that you use all of the data to inform you. So you look at the 30-day view here for Microsoft, and what's happening? Well, the supply trend is down, but it's running above the trend here in the last few days. And then on the demand side, it has dropped below 5. I mean, click that, not the time to buy Microsoft. We'll back test it to figure out when to do that, but boy, it doesn't take back testing to know that if we want to buy rising demand, this is not it. But let's run through the process. So I'm going to click the actions button there, hit profile, and that's going to take me over here to the profiler, and I'm going to look at the outcome if you buy 5 and sell the return there. Really, Microsoft over the last 90 trading days has done pretty well, up 16%. So I've got to update here. So looking at the returns, let me do this again. All right, there we are, 5.5. We want to see, well, can we improve this? And this answer to how to improve it is always going to be down here in the data. So over that 90 days, how often was it a 1? Never. How much of the time was it below 5? Not often. But that tells us, if we want to get better returns, we probably have to buy that below 5. And I might actually do that here and say, well, okay, what if we buy it when it rises over 4? Does that improve our returns? Well, it hasn't been there in that period of time. If it says no return, no results, it's because it hasn't spent any time there. It's been at 5 or higher until just very recently. So if we bought the uptick, let's look at that. The beautiful thing here is while it's just a 6% return, that takes 39 days. We want to do it faster than that in most cases. But look at this. This is a really good outcome. In 9 days, 3%, 14 days, 5% return here. So 75% of the time, 3 of those 4 trades produce a return. That's excellent. And so that's what I want to do every time with everything. You see something on the news, they're talking about a stock, look at it here and see whether the supply-demand conditions warrant use. That is what you want to do. So now let's go look at the FANGs, because I said this gives us a great setup. Microsoft, we know we want to buy an uptick. We want to hold it when it's above 5. It spends a lot of time there. But what about the FANGs overall? Well, let's go look at them. That should inform the decision. Can't just buy a stock without the context. And look at the FANGs. The supply side, a little above trend, not terrible. The demand side, it's weak. So we know that there's higher risk. Not a great time. Even though Microsoft could offer some appeal potentially, if it had rising demand and falling supply, with the FANGs not looking good as a whole, I'm going to avoid that. And then finally, easy step number 5: always manage overall risk. Look at the broad market sentiment. It's been rising, but it's already slowing. So all of these conditions would tell me, boy, I'm going to have a very good opportunity to risk any kind of money. And maybe the only thing that I've taken maybe 10% of my trading account and say is there's something that I can produce a return with. And here's an example: Laredo Petroleum. Look how much time it spends at 10. It's a crazy momentum stock. And I look at this and say, well, the supply side, it's way below the trend. Demand side's hitting the ceiling at 10. So, most of the gains come as demand is suddenly rising, and then there's a, cause and effect. But if I was going to trade something, I'd rather find something when all of these conditions exist that are currently occurring, which is, the broad market doesn't look great, FANGs don't look great. I'm going to look for something like this, realizing there's some risk in it, and always back test the data. Easy step number 4, make sure you do that. Okay, now to finish, let's just go back and very quickly run through the basics. Start with your dashboard, check the trends, create portfolios. If there's something you want to add, you do a static portfolio. If you want to look for criteria, then make it a dynamic portfolio. You can look for everything from dollars per trade. I like liquid stocks that trade $10,000 or more at a time. You can search by key behavior, market cap. We break things into small, mid, large, and mega. Sentiment, the trend, price close, sector, short volume trend, all those kind of things. You can use those criteria to give you a set of things every day. And then back to entries and exits. That's what we're really talking about. We want to find the best opportunities, and it's rising demand, falling supply, or stable supply. Then backtest your data. Profiler, you can do that from just about any place. Broad market sentiment is manage overall risk. You always want to check that. I'll go through all those steps. Find stocks, check what the dashboard's telling me, backtest the data, check the overall risk in the market, and it's that easy. And we're always accessible. If you need help, tq@marketstructureedge.com is my email, and it may take me a little while, but I'll always answer those. So thanks very much for using Edge. We hope you have good success with it.